Hi, good afternoon, everyone. Welcome back to the virtual classes. So, in the last session, we discussed structure of Indian banking system. That means the different types of banks in Indian banking structure. So, in the last session, I said we will discuss most of the banks individually. So, I gave only brief explanation. So, moving further in this chapter, we need to discuss individually the objectives and the functions of SBI, commercial banks, and rural regional banks, then local area banks. These are the things we need to understand in this chapter. So, in today's session, we will understand about the SBI objectives and functions. So the first thing you need to understand how SBI came to exist. So while explaining the evolution of Indian banking system, I explained how it came into exist, but still with a proper diagram, I am explaining once again. See, first we had three banks. All these three banks are set up by East India Company, established by the East India Company, Bank of Bombay, Bank of Bengal, Bank of Madras. For these three banks, they called presidency banks. And later, they merged all these three banks and they called Imperial Bank. So, in 1921, they merged all these three banks and they called Imperial Bank. And again in 1955, they nationalized and they changed the name State Bank of India. That means Imperial Bank becomes State Bank of India. That is why I told you in the last class, SBI is the oldest existing bank in India. So I hope by this diagram you can easily understand. Next, there were seven subsidiaries of SBI, but now it is not. Now we have only State Bank of India because all these seven subsidiary banks of SBI, it is merged with SBI. You all know this State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Indore, State Bank of Mysore, State Bank of Patiala, State Bank of Saurashtra, and State Bank of Travancore. So all the seven merged. Recently, five banks merged with the SBI. So now we have only State Bank of India. Coming to the objectives of State Bank of India, there are so many objectives. In that, the first objective is to act in accordance with the broad economic policies of the government. Of course, whenever government bringing some policy, they need some help from banks. So State Bank of India, it is a bank of government. It acts as a government bank and also it follows all the policies brought by government. Second, it encourages and mobilizes savings. Of course, it do all the functions as like a commercial bank. So it encourages and mobilizes the savings. That means it accepts deposits from the public. And by opening different branches in a rural area, it also promotes rural credit. That means the another main objective is to promote the rural credit, giving more credits in a rural area that helps to the development of rural India. Next objective is to establish government partnership in the provision of cooperative credits. So we have so many cooperative banks, okay, cooperative society, cooperative groups. So to provide credit facilities, financial facilities, it joins its hands with the government. So establish government partnerships to help the cooperative credits. Next, to extend financial help for the establishments of licensed warehouse and cooperative marketing societies. So it provides financial help for the licensed warehouses and the cooperative marketing societies, and also it provides financial help to the small scale cottage industries. Of course, I told you it acts like a commercial banks. So it provides financial assistance for all the area, not only for a small cottage industry. For all the business purpose, they will give loan. For personal purpose, car loan, house loan, they will provide. Okay, and they will also provide financial assistance for a warehouse, cooperative, for everything. They lend loans. Next, to provide remittance facilities to the banking institution, of course, it helps other banks for a remittance. With these objectives, the State Bank of India acts as an agent of RBI. I told you this when I explained evolution of Indian banking system. So when they converted Imperial Bank into State Bank of India, the main aim they were having in that time is SBI must act as an agent for a RBI. That means SBI must be like an assistant for a RBI. That is why SBI performs few functions of RBI. Just to help Reserve Bank of India, they perform few functions as an agent. In that, the first one acts as a government bank. So actually, for every country, central bank must act as a government bank. But in our India, SBI acts as a government bank. Of course, RBI is also government bank, but SBI acts as a government bank. That means on behalf of the government, collecting the money or making the payments, everything, managing the public debt, everything will be taken care by State Bank of India. Okay, so on behalf of government, even when government borrows money from RBI, who manages that? State Bank of India. Second, it acts as a banker's bank. You all know the functions of RBI, Reserve Bank of India. RBI is a banker's bank because RBI lends loans to the different commercial banks. In the same way, State Bank of India is also banker's bank. It provides loans, it lends loans for a commercial banks. Then it acts as a clearing house. See, this is a new concept you need to understand. Clearing house means it is very simple. Bank acts as a mediator between two parties. Okay, so especially in financial transactions, just to ensure the smooth flow of the transactions. For example, imagine there is a person A and person B. Person A wants to sell his Infosys company shares, some 100 shares, for rupees 10,000 to personal B. Now, in between these two people, SBI acts as a clearing house. That means the mediator, middleman. What they will do? They will just ensure this person B receives the 100 shares of Infosys and person A receives for that 10,000 rupees. Okay, so it just ensures the smooth flow of transaction, acts as a mediator. For a simple understanding, I give you another example. See, whenever we go for some land registration or a site registration, most of the times, okay, what we will do? First, we will approach one mediator, middleman, broker. Okay, so if we give them their fees or charge whatever, we need to pay some fees. They will take care of everything. Only job of yours is just to put your signature, give a thumb impression. Your registration will get over. Okay, that means that mediator, that brokers, okay, they act as a middleman, clearing house. So what they are doing there, sub register office and the clients, those who go for a registration. Now in between the buyer and the seller, they act as a middleman and they will take care of the smooth flow of that transaction. So in the same way, SBI acts as a clearing house. That means clearing all the transactions without any problems. Next, we will discuss the functions of State Bank of India. There are some ordinary functions like all the commercial banks, and there are some other extra functions done by State Bank of India. Now, ordinary functions. The State Bank of India performs all kind of commercial banking functions. That means you know the functions of commercial banks. They will accept the deposits, they will lend a loan, they will honor the check, all those things. See, it receives deposit from the public. So it is a normal commercial bank function. They accept deposits. It gives loans and advances against eligible securities, including goods, bill of exchange, then fully paid up shares of company. That means they will give mortgage loans. They will pledge something and they will give loans. Then it invests its surplus funds in the government securities or railway securities. Of course, when they have some surplus extra money with them, they will invest that money on some securities just to earn some profit. These are some common functions of every commercial bank. Now, other functions of State Bank of India. It buy and sells gold and silver. See, this is one unique function. State Bank of India, they buy and sell gold and silver. In the international market, they will buy and they will sell. It is also just to earn profit, they will do that. It acts as an agent of cooperative banks. Of course, for all the cooperative banks, they act as an agent. So they will provide financial assistance. Then it underwrites issues of stock. So this you need to understand. What is underwriting of shares? Underwriting of shares or underwriting of debentures. That means when a company issuing share, IPO, initial public offering, when they're issuing shares, if they're issuing 10,000 shares, it is not sure public will subscribe all the 10,000. No, sometimes public will subscribe only for 8,000 shares. Now the remaining 2,000 shares will be taken by the State Bank of India. For that we call underwriting of shares. So it is just taking a pledge. Okay, you just issue the shares. Okay, whatever the unsold shares remain with you, I will buy that shares. Okay, they will promise and they will buy that shares. For that we call underwriting of issue of shares. Then it administers single or jointly or it estates for any purpose as an executor, trustee or otherwise. So of course it happens when it comes to the letter of credit. I will explain in that in the next slide. It draws a bills of exchange and grants letters of credit. So these two things, bills of exchange and letter of credit, we need to understand. Actually, we use these two things in a international trade, foreign trade. We will understand what is letter of credit. Letter of credit or credit letter. It is a letter from a bank guaranteeing that buyer's payment to a seller will be received on time and for the correct amount. That means, in simple words, understand this. When you are exporting some goods, imagine you are exporting some goods to the New York. Now, you don't know about the buyer. You are just selling your product. You don't know about buyer. So how can you trust that person? After this, that person is telling, okay, you send the goods, I will make the payment. How can you trust because you don't know anything about him? After receiving goods, if he is not making payment, it is a problem for you. That is why you are in a doubt. Okay, you can't trust that person. In the same way, if you are telling first make the payment, then I send you the goods, how that person can trust you? Again, there is a problem. So now there is a problem of trust in this case. Okay, and sometimes there are more chances. After receiving the product, buyer will make some payment and they will say some stories, there are some defective, some damages, so they will pay lesser amount. So that is why what they will do, they will ask for a letter of credit. This is for the safety of both buyer and seller. So usually, so whenever buyer buying some goods, okay, from a seller, he will take a letter of credit from a buyer's bank. Okay, for example, I am purchasing goods. Okay, you are sending it. Now, what I do from my bank, I take a letter. For that, we call letter of credit, and I will send that letter. What the information it will be mentioned in that letter? It is very simple. Bank says, see, you send your goods, he will make the payment. If you are not receiving your amount, instead of him, on behalf of him, I will make the payment. Okay, for that we call letter of credit. That means, in simple words, letter of credit means it is just guarantee letter. Bank is giving guarantee to the seller. If a buyer is not making payment, okay, on behalf of a buyer, I will make the payment. So bank is giving guarantee. Of course, for that, bank charges some amount from the buyer. That is letter of credit. I hope all of you understood. Then the last one is bills of exchange. So bills of exchange, again, it is also a kind of agreement, but here there will be three parties. Now first I will read the definition. I will read it for you. According to Negotiable Instruments Act, section 5, it defined an instrument in a writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to the order of the certain person or to the bearer of the instrument. So it is like a check, but not exactly check. So this bill of exchange, here there are three parties. Imagine there are three persons. Okay, uh, myself, Ajay. Now I am having some money due for a Raghu. Okay, and there is another person, third party, Akshay, is having some money due for me. That means Akshay has to pay me some 1 lakh rupees. Now I has to pay 1 lakh rupees to the Raghu. Now what I will do, instead of collecting from Akshay and then giving it to Raghu, I will tell to the Akshay, directly give that 1 lakh rupees to the Raghu. For that, we follow a specific format like a check. So it contains all the details. Okay. So after writing all the details in a sheet, it's like an agreement. I will send it to the Raghu. See, I informed Akshay you can collect money from Akshay. So I am sending that letter. So he will take that bill of exchange, he will submit it to the Akshay and he will collect 1 lakh rupees. So this is a process of bill of exchange. So here there will be three parties. So I hope all of you understood this bills of exchange. So drawer, drawee, pay. There are three parties. It is just to make the easier transactions. We use this earlier. We used to use in international trade, but now because we have various options, we are still using it, but uh, in a simple ways. So I hope all of you understood this. So this is enough for today's session. In our next session, we will discuss about uh, regional rural banks, local area banks, and the commercial banks. Thank you so much. Have a nice day.